All right, welcome to today's live stream. It is Monday, June 2nd, 2025. Hope you're doing great. And want to talk today. We'll start off with the indexes. We've got the Dow down 173, NASDAQ up slightly, 53. That changes things. Dow 30 is down 97, the NASDAQ up 80, S&P up slightly. Gold up today, crude up today, silver, big move on silver. Look at that, up 5%. Bitcoin down slightly from last week. And yeah, we've got gold up 2.49. It did touch above 3,400 earlier today. It's pulled back since. So let's talk earnings this week. Nothing like last week was NVIDIA. A lot of big companies posted last week, and some really nice upside surprises. This week, the big ones are CrowdStrike after the close tomorrow. Before the open, Dollar General. Dollar General is always the one that gives the interesting. We got Dollar General before the open tomorrow, and then Dollar Tree after before the open on Wednesday. So those always, and then Cracker Barrel on Thursday. They always give sort of a sense of, what's going on in mainstream America in terms of spending power, purchasing power. So we'll see how that goes. CrowdStrike is a company, if you recall, a year ago, there was a big power outage. They were blamed for it. Stock got cut in half. Since then, it's been rebounded quite a bit, but it's going to be interesting to see what that gives in terms of earnings. Hewlett-Packard tomorrow after the close as well. And we've got some sporting companies, Sportsman's Warehouse, Tuesday after the close. Lululemon Thursday after close. So yeah, just just kind of keep your eyes out for earnings. See how, if you have any of these big names, how they affect you. Broadcom after the close on Thursday, and DocuSign. So I wanted to bring to your attention a couple things that upgrades that we've done for the Pick Stocks feature. We've added a search feature for price to earnings ratio. Return on equity is another one. We had revenue growth year over year, and we had implied volatility earlier this year. So go through to clear your filter. You just click the X button, but just like for return on equity, maybe a reasonable is 20%. And price to earnings, you don't want to go. Price to earnings is an interesting metric because on its own, it doesn't really tell you much. But when you can compare stocks within the same sectors, their PE ratio, that tells you the stock that is priced, a better pricing for that company. But you've got to make sure you're within the same sector. So you can't compare a technology stock versus a consumer staple stock. You've got to go apples to apples and pick two companies within the same sector. The lower the PE, the better value. So if you're someone who's interested in picking value stocks or stocks at a fair price, that's how you would use that metric. And then you can look at their revenue growth. When I do my searches now, I scale it back to 15. That's 15% greater than 15. Implied volatility, I'm looking for 40. I want a little more of a volatile stock because I'm an options investor. So I'll buy a position and then sell a covered call. So just something to, just take a look at. And on the sorting table, all of these are added as well. The return on equity, the price to earnings, the revenue growth year over year, MFI, the IV, implied volatility. And we've added which sector or which part of our portfolio assistant this stock falls in. So by the way, welcome to all our new subscribers. Super happy to have you here. And I want to show you, we have this great feature called Ask Finley. This is your personal on-demand financial coach. And we've loaded Finley with our entire database, as well as many other helpful sites for you to go through. So, and you can really have Finley teach you about this software. So we asked Finley to describe the homepage feature of SSP. That's our software. And Finley gave you all of the key aspects of our homepage. So you can take a look at those. We've also asked, tell me about adding, by the way, Kelsey Smith is our demo account. Tell me about adding stocks to the scrolling ticker. So it tells you the 3 or 4 different ways to do that. How does the risk assessment survey work? Now, if y'all haven't, if you're not familiar with the risk assessment, make sure you head over to our main menu, click Portfolio Assistant, and then click Risk Assessment. It's only 13 questions. It won't take you a long time to answer. And then it pops up the Portfolio Assistant. I've talked about that a lot on here. Let's see. And so let's say you have a financial question that isn't related to stocks. Let's say you're interested in purchasing a vehicle. And if you ask Finley so I said here, what's the best choice for buying a car? Include IRA withdrawal, financing at 6% or lease option. And Finley gave some really interesting points about that. So if you're interested in buying, so I'm going to show you what Finley said, and then at the end I'm going to summarize my perspective of purchasing a vehicle or any other financial decision based on what needs to go into making that decision. So Finley brought up a really good point about an IRA withdrawal. Involves some significant consideration, although it's tempting to access the lump sum for a large purchase. Withdrawing from an IRA before the age of 59 and a half typically incurs a 10% early withdrawal penalty and applicable income taxes on the amount withdrawn. So this, that was and I knew Finley would get there, right? Really valid point. Make sure that if you're under 59 and a half, you're going to have to weigh that into, that does weigh into your consideration is that 10% penalty, of course, in taxes. Now, if you have a Roth IRA, you're still subject to that penalty, but you won't be subject to taxes because with a Roth, the taxes are paid money going in and not taxed on the way out. Additionally, such a withdrawal diminishes your retirement savings, potentially impacting your financial security. Moreover, unless the withdrawal is for specific exceptions like medical expenses or purchasing a first home, it's generally advisable to minimize early withdrawals. And that was a really good point. If you're thinking about purchasing a home, if it's your first home, there are certain things that you can do with an IRA in the U.S. and a RRSP in Canada that allows you to take money out. You may not be subject to a penalty, but that money, you do have to replace it. You have to put it back in. So what about financing it at 6%? It can be a favorable option compared to withdrawing from retirement savings. It allows you to distribute the cost of your car over a period of time, preserving your investment accounts and potentially taking advantage of lower interest rate environment. Financing spreads out the payments, enabling you to maintain liquidity and avoid hefty penalties. However, ensure that the loan terms are agreeable and fit within your monthly budget to avoid financial strain. Because that's it. If you're purchasing something by financing it, borrowing money from a car dealership, you'll want to check a few things. You'll want to make sure that there's no prepayment penalty if you decide at some point to just pay the car off. If you're kind of sick of payments, most people shy away from payments and certainly don't want to have a monthly payment. But nevertheless, it allows you to tap another resource for that investment, for that purchase, without touching the IRA, because the IRA will always be there if you don't touch it for certain purchases. Leasing a car might be advantageous if you prefer lower monthly payments and enjoy driving a newer model every few years. Leasing usually involves smaller payments than purchasing outright because you only pay for the car's depreciation during the lease term. However, at the end of the lease, you will not own the car. You may face mileage restrictions and potential fees for excessive wear and tear. In summary, while the choice largely depends on personal financial circumstances and preferences, financing at 6 is often a suitable middle ground, preserving retirement funds while giving manageable payment terms. Always consider the broader impact on your financial health and financial objectives when making such a decision. And, so when you make any type of financial decision, and if the choice is, do I take from my investment portfolio, or do I look for a new source of purchase, a new source to purchase that item, whether it's a car or a home? I'm thinking of some of the bigger purchases. And with a vehicle, the key is to look at in your current portfolio, whether it's an IRA or margin or cash account, what are you currently earning in terms of a return on those investments? If it's greater than the financing term of a 6% simple interest rate, then it makes sense to maintain the money in your tax-deferred vehicle, your IRA, RSP, TFSA, IRA, Roth IRA. Makes sense to keep all that intact and then look for another source. The difference between obviously the lease and the purchase, if you're someone who's inclined to keep a car for a longer period of time, you'd want to look at a car that's, used, basically not brand new, so that you don't have to take that depreciation hit. Anywhere from 3 to 5 years old, you can likely still get an extended warranty on that vehicle, and buy something where some of that depreciation has already been taken into consideration. And looking for an option, financing option outside of your current investments just allows you to broaden out your finances a little bit. And as long as your obviously credit score is good, your payments, your lease payment should be not that much higher than the normal lease rate, and you can purchase it on a lesser finance rate at, like, let's say 6%, if that's what you're looking for. So in terms of a lease versus an outright purchase and financing, you would want to consider how long are you going to keep the vehicle. If you're someone who enjoys, getting a new vehicle every so often, 3 to 4 years, I think you can even go out 5 years on a lease, then you would look at not leasing, but you would look at buying. And the buying, you can also have them give you, just like now there's 40-year, I know it sounds so weird to say, but there's 40-year amortized mortgages in the US right now. I don't recommend those, but with a car, you can even get a longer term payment structure on that vehicle rather than, some people want such a short term, 3 to 5 years. Well, it gives you a very high payment, but if you can look at, maybe a 7 or 10 year drawdown on that car, your payments are less. The interest will be less if you decide at some point to pay that off. So it just kind of makes sense to look at all the different options for you with purchasing anything, really. You look at what's your current rate of return that you're earning on your money, on your investment portfolio. If it's less than 6%, then definitely consider the IRA withdrawal or the withdrawal of other assets within a cash or margin account. to pay cash for that vehicle. You won't have a car payment, and you're good to go. But if you're earning 6% or more on those assets, you keep those intact and you look at other options to purchase that vehicle. You only have two really. One is purchase outright, financing, or a lease option. And that's up to you. It just depends. If you're good with knowing every few years you're going to have to release a vehicle, that's entirely up to you. Or you could lease a vehicle and consider the buyout at the end of the contract. Just look at what that would be. And then, chances are that you would have a much lower lease payment. And then you can look at your IRA or some other asset class that could buy it outright once that lease payment is up and that lease term. So I hope that's helpful. Use Finley. I really recommend using this tool for whatever you're doing. If you're considering, purchase any type of purchase, a vehicle or a home or a second home, vacation home, what have you, Airbnb, really use Finley for questions like that. You can feel confident that at least you're going to get, this answer is good. It's good, but also there was no indication here of considering, your current return from the IRA to really see if that should be an option for you. So we're going to have to do a little tweaking on Finley for that, but I just want you to know, have you all be aware that this is available to you as a good resource. The best resource Finley is for, obviously, is picking stocks. So make sure that you're asking Finley some great investing questions, and let us know what your responses are and if they're satisfactory for you. Have a great investment week, and I'll see you next Monday.